So I think similar to Matt, I think I've met many or most of you in one place or another at Welcome Wednesday or through support dialogues or whatever. But it's great to see you all, and for the handful who I've never met, it's nice to sort of meet you. So I'm the founder and the head of product and tech here at MonkeyPod. And this thing that we're going to be demoing today, this sort of small but also kind of big change to restricted gift accounting, has been a long time coming. As I mentioned, in some ways this is really minor, and a lot of organizations may not even notice, but for some organizations, it's going to be a pretty big deal. So it's great to see you all here, and I'm going to kind of walk you through just some examples of what this means in practice. Before I do that, though, before I share my screen and kind of show you what this looks like, I want to just provide a kind of quick, high-level conceptual overview of what we're talking about here. And if this doesn't make sense in the abstract, that's fine. We'll get to concrete very soon. So why are we making this? So what are we changing and why? So first, kind of historically, how have things worked with restricted gift accounting? So the way we've always done things is we follow nonprofit GAAP, generally accepted accounting principles. And that means that when a restricted gift comes in, we're going to credit a restricted net asset account and debit some asset account like contributions receivable, or if it went directly into your bank account, something like that. This is great. This allows you to always see exactly how much you have in restricted funds and different categories and things like that. There are a few problems with that approach, though, that kind of come up again and again. And they all kind of relate to the basic fact that in this model, restricted gifts aren't like technically accounted for as income until the funds are released from restriction. And when that happens, they're going to hit your net assets released from restriction income account. And so that's where you'll see the income, but you won't see the income in like where you might expect to see it, which is like a contributed income account, right? And so that creates problems in a few areas. One, it creates confusion in budget actuals, because most people, when they create a budget and view the actuals, they expect to see both restricted and unrestricted gifts as part of that. But right now, they can only see the restricted stuff when it's released, not when it comes in. So that is a kind of constant source of confusion. There's also issues with kind of customizability, particularly with respect to the statement of activities, which is maybe the single most important nonprofit report. We kind of show those restricted gifts as income under the restricted column, but we just use your default accounts. You've got one default for contribution from individuals, one default for institutional funders or grants, and that's where we put things. But a lot of organizations want more customizability than that. They want to have a special contributed income account for restricted gifts. So they want to break things out by foundations, corporate sponsors, government, et cetera. And it's historically been basically impossible to do that. So we wanted to change that as well. And then finally, and depending on your personal, specific circumstances, maybe the most important or maybe the least important is that there have been some issues with the trial balance reports that those aren't really used typically by managers, but they're very important to auditors and to accountants who are preparing your 990s. And, because nothing is ever simple, the IRS rules for IRS 990 reporting are a little bit different than the GAAP rules, than the actual accounting standard rules. And most auditors and accountants, they want things in the IRS format, not in the GAAP format, and that requires that restricted gifts be listed as income. And so we've had a lot of cases where an auditor kind of couldn't quite wrap their mind around the way that MonkeyPod's trial balances were presented. So we're going to fix all of those things with a small new feature. And basically what the change is that now when you record a restricted gift, you're still going to have to specify the restricted net asset account, or if you record a restricted grant, it'll create one for you. And that is still where the credit is going to go. However, you're also going to be able to specify a contributed income account. It can be your default or it can be whatever you want. And that's going to be tracked internally as basically a kind of metadata or sort of a pointer on that transaction. And what that allows us to do is, where appropriate, we can use that account instead of the net asset account for reporting purposes. All right, and that means, again, budget actual, statement of activity, and trial balance. You'll also see it in things like account registers, although there's some nuance there. So, so that's the kind of conceptual framework for what we're talking about today. And if that's all Greek to you, no worries. We're going to take a look at this in practice, and you can see sort of what it looks like. So with that, I think I'm going to share my screen. We use the same demo organization for darn near everything here at MonkeyPod. So there's a lot of data in here, but I'm going to add some more to it over the course of this demonstration. So, so the first thing I want to do is I want to just record a restricted gift, and you can see what that looks like. So I go to record donation, and we're going to say this is coming from, I wonder if I'm in here. Let's see. No, let's create a new one for me. Okay, so do an individual, great. Okay. All right, and I'm going to give $100 to this organization. Now, here's a new checkbox. Donation is restricted. Right? And restrictions, for like legal purposes, that means it's either purpose restricted or time restricted. The donor is saying you can only spend this on this program, or you can only spend this in fiscal year 2026 or something like that, or both, right? So donation is restricted. Great. Now we've got two accounts that we have to choose, and these start out as just our defaults, but we can change them to whatever we want. So let's say I'm going to specify, well, we'll just use this one for now, and we'll say for the restricted net asset account, let's look at, I think we've got a scholarship fund here. Let's look at our scholarship fund as being the thing we want to support. Everything else here is basically the same as it has always been. And now we'll save the transaction. And if we go down and look at the accounting on this, you'll see two things. You'll see it's still going to the scholarship. This is the part that hasn't changed, that looks exactly like it would look historically. But we've also got this little reference here to the contributed income account that I chose. That you can see, right? Technically, it's crediting the restricted net asset account, but it's, you know, can report it. You know, can be reported as contributed income as appropriate. So similarly, let's record a grant now. Here, we're going to record a new grant, and we're going to say amazing project funding for 2026. And let's say this award was $10,000, and it came from what foundation? How about the Baltimore Foundation? I don't know what that is, but I applaud them for their support of nonprofit organizations. Okay, we're going to go down to general operating support or restricted funding. We're going to say restricted funding. Now here you'll notice you're not going to select the restricted net asset account, because anytime you record a restricted grant, MonkeyPod creates a special restricted net asset account for tracking those funds. That has not changed. That's still the way this works, but you can specify an income account. Now, in this case, this is just using the default for institutional funders. Most organizations have a different default for institutional funders versus individual. It looks like this organization has it just as the same, which is fine. We can change that though. Let's choose our awesome restricted grants income account. Okay. Now we're going to save this. And now if we look at the accounting here, we'll see similar to what we saw in the donation. We've got the restricted net asset account that we tracked, and then we've got this special pointer toward this contributed income account. Now, I mentioned this is going to be visible on the register, and that's mainly to avoid confusion, but it's also kind of helpful. So if we go through here, right, we're going to see this on this awesome restricted grants contributed income accounts register. There's nothing in the debit or credit column because it's not actually technically a debit or credit to that account, but we have it listed here so that when you're kind of looking at this register, you can see that something happened that involved this account, even though it didn't technically debit or credit it. And so you can click through to the restricted net asset account here, or you can click through to the actual grant. Let's see what this looks like on a statement of activities. Because as I mentioned, I'll just do this month, and we'll run the report. And you'll see here that grant in awesome restricted grant is now being reported in the column or in the restricted column with the account that you specified, right? Previously, it would always just automatically be reported with your like default account for grant income. And that, like I said, for some organizations is fine, but for some is a big problem. So now you have control over how that's going to show up on your statement of activities. The other thing I mentioned is budgets. So let's go ahead and create a budget, and we'll show you what that looks like. So we're going to say demo budget. We'll say for the date range, let's just do today, just so we can really kind of see this in isolation. And let's say we're going to budget that we're going to get, let's say we're only expecting $8,000 in awesome restricted grants. And, like I said, let's say that's it for now. Now, when I look at the actuals on this, ta-da, we're showing $10,000 in actuals under awesome restricted grants. This is in some ways the biggest change, because previously you would have seen a 0 for that. And all of your budgets are now going to show this accurately. So you may see some changes there. But we're showing and we're also, of course, capturing the restricted donation that came in. Now, if we release some of those funds from restriction, they're still going to show up here, and they're not going to show up on net assets released from restriction, and that's because we don't want to double count. However, if we released funds from restriction from a prior period or from kind of outside the scope of this budget, right, something that wasn't included in income on this budget, but something that is within the scope of this budget, then that will still be listed as net assets released from restriction. So that's budgets. I can show trial balance. I don't know how useful that's going to be for this. Maybe we'll wait and see if anybody really wants to dig into that. It's a very kind of technical report that, like I said, if you're using the trial balance as a manager regularly, you're probably doing something wrong. You really don't need that one. It's used for accountants at the end of the year to kind of make sure everything adds up, and then they'll sometimes like feed it into their 990 generation program or something along those lines. So that's really it. That's really all there is to show here. As I said, kind of a very, very minor change, but for those organizations that rely extensively on restricted support, or who are kind of maximalists in their chart of accounts and kind of reporting philosophy, which is fine. I tend to be a minimalist, but not everyone follows that paradigm. This will be pretty useful for those kinds of organizations because of the increased customizability and the increased ability to really kind of tell their story in whatever way they think makes the most sense. So I'm going to stop talking for now, and we can kick it over to questions.
Yeah, we do right away have a question about how to look at the trial balance. So I think it would be
okay. All right.
good to take a look at
let's
that.
Do it. Sure. So we can do the trial balance, and we'll do it for this month so that we can kind of look at stuff that applies to this month. And basically, it's gonna, so we show all of our, trial balance include all of your asset and liability and net asset accounts. But once we get down to income, there's a lot of restricted net asset accounts in this demo organization, because I think probably in every single demo we ever do, somebody's recording a grant. So, so here you can see that $10,000 in awesome restricted grants is showing up in the trial balance under that account, and it's going to not show up where did we record it? Here we go. It's not going to show up under this net assets with no restrictions grant account. And that is, for better or worse, kind of what in our experience accountants and auditors expect to see. All right, we can only show it in one of the two places because the trial balance, has to balance. But that's where we. So this is, I think, all things considered, the better place to show it. It's a little bit clearer, and it's more importantly just kind of in line with what most accountants expect to see.
So Jamie's question here was, right now it's under the 3187 account. I think, to clarify, I think prior to yesterday, when this change rolled out, which was yesterday afternoon, then that $10,000 would have showed up associated with 3187. Correct, Adam?
On the trial balance, yes.
On the trial balance, yes. Okay. And now it is showing up associated with a separate income account.
With the income account that you specified when recording the grant. Yep.
But yes, that I was actually just going to touch on that, Jamie. But only because you created the separate account, which is true. So I did want to make sure that we clarify that, Adam. For any restricted grants that were recorded in the past, where is the income for those accounts now going to show up?
Yeah, so we had to update all historical data for all organizations on all restricted grants, and we used those defaults that you have. So everyone's got a default account for your individual contributions and for your grants. Oops, I think I spent right past it. Yeah, here we go. Yep. Right, and like I said, this organization is using the same one for both, which many do, but it actually probably would have been cleaner if I'd made a distinction there before starting this. But in any event, yeah, so for anything you recorded before this change, it's going to use those defaults. And so if you want to change that, you can. You probably don't want to change it for, historical stuff like, that would change your 990s that you've filed or something like that, or any audited financials. You probably leave those alone. But for this year, if you feel like tinkering with stuff, you can make edits and it'll all work fine.
So just to reiterate, if anybody wants to double check, if you go into the finance menu and select automated bookkeeping, that's where you can see what all of your default accounts are. And so you can see where any income associated with restricted grants is going to go. It's going to go to whatever is set as your default grant income account.
Yeah, and that's true for unrestricted grants as well.
Yeah,
okay. Just to be totally clear.
So question in the chat is, if I pull the trial balance today, how is that different from the one that I gave to the CPA yesterday?
It's different. It's different because it's clearer for their purposes and it's more in line with IRS rules as opposed to GAAP. That's conceptually how it's different. Technically, specifically how it's different, money that came in the form of restricted gifts yesterday would have showed up as a credit balance to that restricted net asset account. And now instead it's going to be included as part of the credit balance for the associated contributed income account. And I don't want to get too into the weeds on this because, again, like most organizations on a day-to-day basis really shouldn't be messing around with their trial balance. But one of the things that really was a legitimate problem with that approach is the trial balance shows the net credit and debit balance, right? So if you had a restricted gift that came in for, let's say, $10,000 going to some restricted fund, but then over the course of the year, you released all $10,000 of that funding, right? The net balance on that account is going to be zero. So the trial balance yesterday would have shown zero for that restricted net asset account. There was no inclusion of the actual grant income, and that is a problem, and is something that required accountants to kind of do some workarounds and extra reporting and things like that to get their data correct and complete. So in some ways that's like the most important change because we try very hard to save you time and money on your audits, certainly not to make them more complicated. And I think, even yesterday, we probably still unbalanced. We're making them much simpler than if you're coming from QuickBooks or something like that. But today, I think we're a big step closer to that objective.
Okay, so one other question in the chat, and then I'm going to open things up so that folks can unmute and ask questions in real time if they'd like to. But Debbie just asked, does this mean we can use a fiscal sponsorship grants contributed income account for all fiscal sponsorship grants to be able to break them out from other restricted contributed income? I believe the answer is yes. Okay.
Absolutely. Yep, absolutely. I know Debbie.
Debbie's very excited about this.
That's great. I'm not surprised. She's with one of the fiscal sponsors that we work with, which if you don't know what that means, don't worry about it. But we do work with a number of fiscal sponsors where we provide support for their kind of program administration, and also we provide a version of MonkeyPod for their fiscal sponsees. So yes, so that's a good use case here.
I've now given folks the ability to unmute, so feel free to either raise your hand or jump in. I do have one other question here from Kristen in the chat, which is, how do I reclassify restricted gifts that were received this fiscal year using this new account methodology?
Yeah, so let's take a look at one of the things that I just recorded. So let's say we did. Let's take something that was recorded prior to this change, right? So let's take something that was recorded like on a demo call or something prior to this change. So this donation was one of the ones that was just automatically updated with the change, and you can see it's going into the default contributions account. If I go to edit it, we see MonkeyPod knows that this donation was restricted. It's got what we used previously, but let's say this is an event sponsorship instead. So we can do that and save it. And if we go down, we'll see it's now using the event sponsorships account. So that's all you need to do. Just edit it and change the income account that is specified.
So just to double down on that, you would go into each individual donation, each individual grant, and you would need to edit that and edit the account associated with it, the income account associated with it, correct?
Correct. Yeah. And yes, that's the short answer. Yes, you would have to edit them individually. There's no way to edit them en masse.
Okay. Eleni's got a question here. We created an events class to track sponsorship income with the expenses. Now we could just create an event sponsorship income account. Any reason to keep the class?
Great question. So classes are most important for tracking expenses, and that's because that's the only case where they really are like required by nonprofit GAAP, right? You have to track your expenses by what are called functional categories, which is what classes do. That's why they break them up into programs, management, and fundraising, and then you can have sub-accounts or whatever. So I would say if the class is useful for that purpose, if the class is useful for sort of categorizing financial activity as part of some sort of permanent program for your organization, then it's useful to keep it. If the only reason you're doing it is for this and it's kind of a workaround, then I would say, yeah, like get rid of it. It's not helping you. And I think list of classes should generally err on the side of being shorter rather than longer.
Okay, so Mary Ellen's got a question about, she says, so instead of recording restricted donations or grants to a net asset account, do I now need to set up an income account for restricted donations?
Absolutely not. You can, but you certainly don't have to. In fact, I would say for most folks, it's probably not necessary, but some really like to do it. But I want to be really clear. You still need to record restricted gifts as restricted, and they will still hit primarily that restricted net asset account. That part is not changing. All we're doing is allowing you to choose which contributed income account gets associated with that restricted gift, but it's not on a pure accounting level. That contributed income account is still not being credited because nonprofit GAAP says it's not supposed to be credited. Really, it's instead it's increasing that restricted net asset account.
So it's basically an optional thing that you can do. You can still just use sort of one income account for all of your grants or all of your donations. But if you wanted to add an additional income count to separate that out, you can. It's just sort of an optional thing you can do. All right. I think we are in good shape. As always, our team is more than happy to help you with this or anything else that you're struggling with in MonkeyPod. So feel free to reach out to us at support@monkeypod.io. You can always also click that orange support button in the lower right hand corner. We're happy to answer any questions via email or talk through your specific situation if things aren't making sense to you. So thank you all again for your time. If we don't talk to you sooner, have a wonderful holiday season and talk to you soon.